Hey guys, Jim Davis here with NAI Beverly-Hanks in Asheville, North Carolina. Today, I had a great question come through my email from an investor out of town, new to the real estate world. And his question was, who the heck and why are people buying up some of these properties, changing hands for really low cap rates? And that's a fairly easy question to answer, and I can see why it would be crazy to look at when maybe, we see lots of times in for instance, the multifamily market I do a lot of work in. Class A properties are changing hands at 4 and 5% cap rates, which obviously is exceptionally low. But the key here is cap rates are not just a sign of what you're going to get in return. They're an indicator of risk, generally speaking, in the commercial real estate world. So what I mean by that is generally a higher return property is going to have more risk associated with it. So that's kind of an indicator we look for. A lower cap rate property is typically justified at that lower cap rate sale price because it has less risk associated with it. Now obviously that's not always the case, but generally it is. So who and why are people buying these? Obviously why is because it's less risk. Who is buying these? Again, back to the specific example of multifamily, I deal a lot with the multifamily market, and what I see is my clients are generally not investing in properties for their own investment. It's typically private equity groups, large-scale holding groups, stuff like that. So with that said, you need to keep in mind these people are not just investing on their own dollar, they're investing for others. So there's a definite serious responsibility there, and my clients take that very seriously, obviously. So when they're looking at investments, they generally will lean towards properties that have less risk if they're in a position where they can hold them long term, rather than a short hold with more risk. And that's generally what we're seeing a lot right now in the multifamily market, even with the value add side, the B, C class properties. People are a little less reluctant to take on the more risky properties. They rather lose a little bit of that return each year and have something they can hold on to longer. Hope that makes sense. Reach out if you have any questions on that. I'm happy to clarify anything. Keep the questions coming. I've had questions come from all over the United States the last few weeks, so I appreciate that. And there's no stupid question. If I can't answer it, I will find somebody that can answer it for you. So keep them coming. Till next time, talk soon, guys. Thanks.